IVM.
You're listening to a special edition of Paisa, Vaisa, featuring Mr. Nithin Kamath, founder of Zerodha, a company that offers brokerage-free equity investments. In the second part of this series, Nithin talks to Anupam about stock trading basics, how one should trade stocks, and things a trader must know.
Folks, welcome back to Paisa Vaisa. This is the second episode of our three-part series with Nithin Kamath of Zerodha. I'm your host Anupam Gupta, B50 on Twitter. In the first part, we discuss Nithin's absolutely fascinating journey and his career and how he set up Zerodha. In this second episode, we're going to talk about what he's fantastic at, which is stock trading. Nithin, welcome back to Paisa Vaisa. Thank you for being here. Let's go into this as like the hashtag goes ELI5, right? Explain like M5. What exactly is stock trading and what does it involve? Okay.
Right. Okay, I think firstly, I've spoken to, I don't know how good a trader I am, but I think one of the good things that has happened to me in my life is I've actually been able to speak to a lot of good traders as well. Okay. And good traders who actually make money, and not really just claim to be making money, right? So yeah, I think about stock trading, what I've realized meeting everyone, including me, is that trading is a way of life. I don't think you can say that I'm going to trade only stocks, right? I think stock trading is also about, are you like that person who likes to generally like taking bets? You have conviction on ideas and then take bets on it. So I think that's probably the first most important thing to be a trader, is that you need to be convinced on ideas. You need to keep your eyes open, look around and see trends, and then kind of have the conviction to kind of put some money behind those that ideas that you develop looking at things around you. So stock trading, for a layman who is just starting off, is a lot of people assume, it's taken me years to convince my dad what I do as a business, and as because he thinks trading is all about buying stock and waiting for it to go up and then selling it, right? I'll tell you this, 0.5% of exchange turnover comes from that volume, right? Okay. So between 0.5 to 1% of trades on the exchange are actually equity delivery trades, which is what people buy stock, wait for a few days and sell it. Right.
Yeah, okay.
Right. So but then that's where everyone gets started, right? Everyone gets started, buying.
So you say you wake up one day in the morning and say that, you buy Maruti and you wait for it, you buy it at 9,000 and you say, okay, maybe in 10 days it'll go to 9,500, you make 500 on the trade.
Absolutely, right? As in, it's, you put in 1 lakh rupees, you made 5%, so you made 5,000 rupees on the trade. That's where people get started. But then immediately they graduate. People who are more inclined to learn, they tend to graduate. Actually, the trading actually today, if I have to look at last 2-3 years, I think most people who start trading start off with mutual funds, right?
How can you trade mutual funds?
No, not trade mutual funds as in their
No, I'm saying that today the entire narrative on mutual funds is SIP, long term.
Yeah, okay. To say, they start looking at stocks after mutual fund.
Right? Got it. Yeah. So they've hit the big money in a mutual fund. They realize that my NAV has gone up from X to Y. Right. Why don't I look at stocks directly?
Correct. Okay. Right. Okay. So you maybe did a tax saving, and then you said, oh, my tax savings up 15%. How's it up 15%? Then you realize the underlying stock, there are a few stocks which hit 30-40%.
Yes.
Right. And then you want to do this. Now, greed is inherent everywhere, right? So what happens is this person who says that 1 lakh can, if I can catch 5% on 1 lakh, I make 5,000. The guy says, can I buy for 3 lakh rupees with just my 1 lakh? Right? That's the next thing in your mind.
Yeah.
So that's where people get introduced to leverage, right? As in, leverage in India can be done through two ways. One is what's called as margin funding. Right, so you can go to your broker and say, I bring in my 1 lakh, can you lend me some money? Yeah. And I buy, instead of buying for 1 lakh, now I buy for 3 or 4 lakhs or whatever.
Okay.
Right?
Okay. So the broker provides me some capital.
Yeah.
Okay.
Right, and then the broker charges an interest on the capital he's providing. Right, so that's the next logical step, what trader takes, which is to kind of start doing leverage trades.
So I put in my own 1 lakh, the broker gives me 4, boom, my capital is 5 lakhs.
Yeah.
Okay.
Right.
Okay.
Now, when you make 5%, you're not making 5,000, you're actually making 25,000, right?
That's right.
Right. So now the risk with leverage is that when you lose 5%, you're actually losing 25,000 on your 1 lakh.
Yeah.
So yeah, but then that's how people are, right? As in, people want to get more when they're right. So people get used to this. Along the way, people realize that the only way to make money in the market shouldn't be buy and sell, right?
Right.
I mean, because I should maybe be able to make money by selling something that I mean, if I think, say, a stock price is at 1,000, but ideally it should be at 900, I should be able to even make money on this idea.
That
right?
doesn't come easily to everybody. The idea of shorting is not there because we are just used to buying low, selling high.
Absolutely right.
Okay.
Everywhere around us, we are used to buying low and selling high. This whole selling first and then buying it back is a very complicated concept to explain. But then when people have spent a few months trying to do this, and they eventually pick up the concept of shorting stock.
Right. They get confidence in that.
They get confidence in that, right? As in, and to short a stock today in India, there's no stock lending and borrowing mechanism which is very active. So people get introduced to futures trading.
Correct.
So that's logically the next step. What people follow, and in between all of this, there are also a few guys who get into trading penny stocks.
Okay.
So. I mean, which I'd advise strongly against.
Okay. You want to be liquid. You want to have exposure to big, large liquid names. So entry, exit is better. Price discovery is better. Yeah,
and the thing about penny stocks is, if these are manipulated stocks mostly, right?
Correct. So you're actually playing against the market.
Against the market. As in, there are a bunch of operators.
There's a cartel out there which is operating against it. Then whatever you do, you can't.
You cannot.
Okay.
Right. I mean. So I mean, unless there is, the business well, I don't think you should be investing into just a stock, because, so these are all like how a trader usually graduates. Now, how do you trade these stocks is another thing, right?
Yeah.
So like if someone were to come to me and say, Nithin, how should I start off trading? I'd advise the person to start off using technical analysis, which is... which is probably the safest way to start off trading the markets.
Just follow trends.
I mean, trends or whatever the indicators.
And basics are like you're looking at moving averages.
I mean, moving averages like a beautiful...
DMAs, you've got 50 DMAs.
Right.
And whenever you spot a change in the pattern, you probably take I mean, I'm guessing that's what a technical analysis trade is led by. Say you've got Reliance... and for 10 years, it's been in a certain range, and your charts show you that there's a breakout.
Right.
You play that trade. Am I right in that?
I mean, as in, it could be as in there are multiple indicators, right? Right? No, the beautiful thing about technical analysis that none of these indicators on technical analysis typically allows you to go against the trend. Right?
Okay, so it forces you to follow a certain pattern, a certain discipline.
Correct. I mean... I don't know what more value technical analysis brings, but I think what it teaches a beginner is the rules of the game, right?
Sure.
The rules of the game is, 90% of the times you should be with your trend, you shouldn't actually go against the trend, So technical analysis is a great way to start. I was recently having a conversation with Jack Schwager, right?
I saw that. He wrote Market Wizards.
Correct, absolutely right. He said a very interesting thing on why he moved away from fundamental analysis to trading using technical analysis.
Oh my, okay. Right. What do you say?
Right. So the thing about what is fundamental analysis is where you kind of say, okay, how many bikes are being sold in India?
EPS and forecast and market size and opportunity and valuations and PE and stuff like that, which is fine in its place. No problem. That's fine in its own place.
But the only problem with that is that it's a very bad risk management strategy. So what it means is, say, assuming, so today there are 1 lakh motorcycles being sold, right? So you go buy a Hero stock,
or
right?
TVS or Bajaj, whatever.
Whatever stock, right? Okay. So next month, the number of motorcycles sold was actually more, right? Mm-hmm. So now your analysis actually, you have to be more convinced to buy more stock, right? Mm-hmm. But what if the stock price is going down, right?
Even though the bike sales went up.
Yeah, I mean, which happen. It always happens, right? So now then there is no risk management for you, right? Because now your original thesis of investing was that the bike sales are going up,
and therefore I should buy the stock,
right? Now if bike sales keep going up, you need to keep buying stocks, right? More of this, so potentially you can just keep buying more and more.
Correct.
Whereas and be eventually wrong in terms of if you made money or not. So I think what technical analysis does is that it says that the price of the stock is factors in everything.
Correct.
So you trade basis the price. You ignore everything else, right?
Sure.
It's markets efficient. If there's news out there that you don't know, even that is factored into the price, right? So that's for a trader. I mean, if you're a long-term, like as I said, you're an investor who believes
Warren Buffett varieties. If you follow, and there's nothing wrong with that.
Yeah,
okay?
you're saying the next 5 years motorcycle sales is going to be up. Go buy the stock, right?
If your time horizon is 5 years and you're confident that bike sales are going to go up, then go ahead and buy the stock.
Right.
Correct.
So technical analysis is a great place to start, right? And but the thing about technical analysis is that you need to know when to kind of apply what indicators. That means that means, it's not like one indicator works across, right?
Sure.
In a choppy market, if you're folling a moving average kind of a strategy, you will keep getting chopped. So I think personally, the guys I've seen in my life who made money, including myself, is you have to. It's a game of skill, actually.
Of course.
This isn't just some rule book you follow and you can just make money, right? I mean, there are a few guys who are good at programming, who kind of see mispricing strategies, right? Which is so as long as the mispricing is there, there's another interesting story. Before Black-Scholes actually had the options pricing formula
model,
which got a Nobel Prize. There were people who already had it.
Oh,
right?
Okay.
Who didn't go publish the paper, right? But they were using that opportunity of using the formula to actually make money on the markets, and they've all become billionaires. Because then if option is trading and no one knows what is the actual price it should trade at, and there's only this one guy who's got this formula that knows, so then he's got a way to make money. So like that, there are a lot of very smart quant guys, who suddenly find some kind of a mispricing between markets and etc., and who kind of play that, But most retail traders don't really fall into that bracket, right? So for us, retail traders, I think you need to build kind of a gut for this market, right? And that doesn't come easy, right? I mean, that takes a while. It'll probably take like 5 to 7, 8 years of you need to read as much about the markets. You trade as many things as possible. So you then kind of figure out what works for you, right? What worked for me may not work for you or someone else.
Always,
right? And I think other challenge for us in India is that we don't really have too many. I mean, we don't have any trader to look up to, right? There are no role models for us.
Absolutely, and because here we've got social stigma around trading.
Absolutely,
I find that so completely stupid. I mean, to me, the color of money doesn't change from where you get it.
Right.
If you've made money as an investor, fantastic, but you can't judge someone who's a trader just because he made his money out of, maybe a few days and all that. You had the finance secretary who for some reason said that trading money is, he said, I don't know what he was thinking, but I get what you're saying. There are no role models because it's not ingrained in us to be traders. Whereas abroad, you got people like George Soros. I mean, these are respectable people who've done fantastic, who've done really well for themselves and set examples.
Yeah, I mean, if you pick up the Market Wizard book, every guy there is a legend, right? So it's not just the Warren Buffett, George Soros, right? You can find someone who probably is very close to the way you like to trade.
Yes.
Right. So, and I think and this whole not having role model in India, outside cricket and Bollywood is there in every field, right?
I know.
So I think and personally for me as well, throughout my life I was told to go get a real job, so it's now that it's worked out, people call it passion and etc. But then I am exactly what I'm doing today, what I was doing 10 years back. So there's
that's really humble of you to say that. I mean, you've really achieved a lot.
So as I said, so trading has multiple things, but you can start off technical analysis. You need to learn as much, and then I think a good trader is a trader who also builds that gut for the markets. In the sense,
that can only come from years of experience.
That's about it. I mean, just this whole mathematical way of doing it is possible for mathematicians, right? As in, it's extremely tough for retail traders to kind of build the skill.
Okay.
Yeah, so I think technical analysis, will help you stay in the game.
Sure.
To be able to spend enough time to learn about the markets. So.
Tell me psychologically, okay? Someone's come new to you for trading, and I'm saying that I've got the technical analysis part, I've got the reading part, I've got all the discipline part, all of that I've got. Psychologically, what, if there are 3 things that, or 4, 5, whatever it is, that you think a trader must know, okay? What would those psychological things be? I'm talking about stuff like the ability to take risk.
Right.
Okay, because that I think is core to a trader.
Correct. Right.
Which I don't think comes very easily to us.
Right.
We're used to the investing part, and markets for the last 2-3 years have been so kind to us that we've assumed that abhi lifelong hi aisa, we'll get 12% per year, 10% per year, blah, blah, blah.
Right.
For a trader, that's not the case at all.
Correct.
The day move is... So psychologically, what do you think, any trader who's just starting off, what are these few things that he should always keep in mind?
No, I think first most important thing is not to keep a target in terms of money,
Okay.
Because, as soon as you put that rupee target and how much money you want to make from trading.
So you're saying that I'm putting 1 lakh and I want to reach 1 crore.
I mean, not even that. I mean, people put 1 lakh and say, want to make 10,000 in a month, right? 10%. Right? So now, as soon as you put that target, you're going to do things to reach the target.
Okay.
Which is a flawed way of trading, So trading, is about trading the opportunity.
Sure.
And how much you make, there's no control on it, So there is no way you can control that. What will be the outcome of trades? So you shouldn't put a target, right? Otherwise, what happens is people end up, I've seen this, as a broker today, I get to interact with so many traders.
Sure.
I think they go wrong mostly right from the start, which is to expect something out of this. Right?
Okay.
And I think people should come to the market and say, I'm putting 1 lakh and I just want to be in the game, right?
Okay.
I want to learn.
Let's just go with it. Let's see where this goes. Okay.
Yeah, and I think it should start there, right? And even the professional guys, right? I mean, there's this very interesting story about how one of these billionaire traders in the US lost everything because he wanted to buy a car. Right. So essentially what happened was he saw one of those Ferraris parked outside, and on the day he comes in and he says, I want to make money from trades today to buy the Ferrari.
Okay.
And that's it. So he ends up he just takes an over aggressive bet that day, and then to make up. It's just a chain. Yeah.
Tell me something about risk. Right. I mean, what should someone be prepared to lose? I mean, because we've got the upside part out here. Okay? Right. You're saying that just go with the flow, do your trades, don't keep a target in mind, don't be like 1 lakh to 1 crore, etc., etc. How does a trader psychologically deal with risk?
Right. No, I mean, I think the first most important thing is to know how much you can lose on a certain trade. Right? You should define that, because like one of those stupid strategies I used to have, which, I mean, it's not stupid. It's actually extremely smart in a sense. Is I used to have another account where I used to put money that I can afford to lose, right? And just buy out of the money options, right? But then
okay, okay, fine,
right,
got it.
In the sense, I don't really care about this.
So you're playing a tail event or so, tail risk kind of
like one of those Nassim Taleb kind of a thing, right? So where you're just buying deep out of the money options.
So today the Nifty is at whatever, I think it's 10,500. You're saying let's just take a Nifty at 7,000, 9,000?
9,500 puts or 9,000 puts or something, and just keep it there.
And you lose the entire money.
Yeah, but then only if the trend is down, right? Right now, as you can see, it's down 10% from the top.
Yes.
So potentially there could be a 20% event, right?
Yes, and that sets you up for a much better chance to make that money if it happens.
Correct,
but if the market is going from 9,000 to 10,000 and it's in one direction,
you can't be going against the trend.
Why would you want to take? Okay, got it.
Right?
Okay.
So, and typically these, it has to be puts and not calls.
That's interesting. Why do you say that?
Yeah, because markets don't go up in a hurry. They fall in a hurry,
Okay.
So even if you buy calls, you need enough time for the market to give you that that event, right? That. So typically the idea is to say is to figure points where you think market can fall.
Okay.
And then buy deep out of the money options and put in 1% of your capital or 1.5%.
Something that you can afford to lose.
Yeah, I mean, right? As in. No, I think as in terms of risk, I think firstly, I think what people should keep in mind is that shouldn't lose more than 1% of capital on a single trade.
Sure. Okay.
Right. Because if it's very, like, I think I see this every day with our clients. Right. Is that you buy a stock at 100, it goes to 102, you will sell it. Right. Thinking you need to book profits. Right. Yeah. But then it goes to 98, you'll be like, oh no, it'll bounce back, right? So you can never come up on this game if you're gonna keep, you're not gonna exit when you have losses and just keep exiting every time, with small profits. Okay. And this is the biggest problem in the industry, right? Is that people inherently, as soon as they see a profit, they don't want to go wrong on it, so they book out fast. Right. But when there's a loss, hope takes over, and then
that's interesting. So you've made a 2 rupee profit, you want to protect that, so just sell. But you made a 5 rupees loss, you're like, okay, no, it'll turn around, turn around, and just wait it out. Whereas what you should be doing is let the profitable trade run, and just let it make more money.
Or if you're someone who likes to cut your profits fast, that's the nature of a scalper. It's okay, but dude, cut it faster when it's a loss, right? So don't say that my losses, I'm okay to keep it for longer, but my profits has to be short. So
that's so tempting psychologically, right? Because when a stock goes down and you're losing money, your first thing is, okay, let's just wait. It will go back. Whereas the smart thing to do would be to just cut your loss and just move out and say, okay, I took my loss. That's it.
Correct. Otherwise, what happens is, you get emotional. Like Kingfisher was the solid trade, right? People just kept buying on every fall, right? As in and I'm sure even now with PNB as well, it's the same thing is going to be happening, right? People are like, oh, jayega na upar, like some, it's
you'll have all sorts of theories, like what's the book value? Take a 50% haircut on that. What's the worst it could happen?
So it's just a lottery right now. People are taking, if someone's going and buying it, right? So I think in terms of risk, I think the most important thing about risk is to say, define your loss before a trade and make sure you stick to it, because losses are easiest to get out as fast as possible, because the more longer you wait, the tougher it becomes, to exit, right? So that is, the second thing. And third thing is, is that not a smart thing to say as a broker, but I think the biggest stop loss you need to have is on trading itself.
Interesting.
Is that because I think trading is like a game of skill. So you cannot suddenly read 100 books and say I'll become a better trader. It's like learning piano or things like that. Not everyone's meant to be doing this.
Correct.
Right, and the problem with people is that ego takes over.
Yes,
right,
and it's a powerful force.
Right, and they to make the bad wrong go right. They throw good money at bad money. Right, so I think people need to give it some time, put some capital, see if they enjoy it, and then be honest about if they actually enjoy it, or is it just ego taking over, right? Because a lot of times people don't enjoy trading, right? But just because they've lost money, they want to make back, and they claim to be enjoying it, right? So
got it. Folks, that was really, man, I could just go on talking about this for an hour, but we're going to wrap. This was the second part where we spoke about stock trading basics, and in the first part we spoke about Nithin's fascinating career and how he set up Zerodha, and in the third and final section, final part of our 3-part series, we are going to talk about brokerage basics. We are with Nithin Kamath of Zerodha. Stay tuned.
Thank you for listening. If you have any money-related questions, you can tweet to us at IVM Podcasts or email us at paisavaisa@indusvox.com.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
He bends down to test the warm water for his bath. He comes here to quench his thirst for a hot shower and some podcasts. You can witness how he enjoys having other people talk about cool stuff in his bathroom. Indeed, it helps him with his loneliness. You can find more of his pieces on ivmpodcast.com, your one-stop destination where you can check out the coolest Indian podcasts. Happy listening.